Resume. Cool. All right. I'm thrilled to have John in person for the first in-person fireside chat with Lattice. John, we've known each other for a while now.
Yeah, 5+ years.
5+ years. We worked together at Notre Dame a little bit, and now you're building Garry Elevator.
Yeah.
Where do you want to start?
I mean, we can start anywhere you want to. I'm excited to talk everything from what the community's building at Lattice to like the way we're trying to invest in kind of like community action and cooperative products at Garry Elevator. Or I mean, we can just dive deep on what we did together at Notre Dame, which is its own strange rabbit hole. So
that is. No, let's focus on Garry Elevator for sure.
Yeah.
Tell us why you started it and what communal action is, because that's a big part of your thesis.
Yeah. Why I started it. I was working with a number of founders and communities who couldn't get capital. Or if they could, it wasn't coming from sources that helped them kind of become the platforms that they needed to. And so just to clarify, like, when we started working at Notre Dame, that was kind of the start of a 10-year period for me in South Bend. And I really got to know a city that has gone through the typical kind of post-industrial experience in the US, which is a boom of investment and then, decades of underinvestment or complete divestment. And so, you have median household incomes that are somewhere between $40,000 and $45,000. You have kind of like economic growth statistics and ex-migration that would sort of indicate a lot of economic malaise. And so I saw a lot of ways that all the things we were working on in the Notre Dame Investment Office, all like the very wonderful structures of capital markets weren't working for cities that I cared about. And so I started looking for structures and founders and a bunch of different people who were working on the problems that my city faced and other cities like it. And it was really interesting to see the ways that kind of traditional groups solved this, whether it be co-ops or mutual aid societies, or even really informal organizations of neighborhood associations and resources. But they didn't have any sophisticated tools. They didn't have any technological tools for them to share information well. And they certainly didn't have financial tools. Like, you should think about a lot of these groups as operating strictly in the cash economy. There's very little debt financing available to them. They're operating off of like book value of equity. They're not able to create equity or grow equity. So, as I looked at what we could deal with in the capital markets, and increasingly what technology was enabling us to do through things like cryptoassets, through things like very simple user interfaces that can be deployed for very low cost. I just got really excited about technology, and in particular financial technology's ability to help with a lot of these things. So I started working on some of the biggest problems that we were dealing with as a city. The connectivity issues that we faced. More than 25% of people in South Bend don't have a wired internet connection into the home. At least that's the city's estimate. And nearly 50% of St. Joe County doesn't have download speeds north of like 50 megabytes a second. So that's an important problem to start working on from the bottom up, just as people are trying to work on it from the top down. I also saw like a bunch of problems with like communal wellness and communal well-being. A lot of anxiety, depression, untreated kind of traumatic experiences. And so finding ways to help people kind of improve their own individual well-being so that they could participate in some of these collective structures. I've been working with founders to try and build some of these platforms that would help people kind of take agency over their own wellness, over the infrastructure that surrounds them, and over the future of their community. And I think about all of these things as falling under an umbrella that is called communal action, which kind of has a long history, typically a nonprofit history, almost a social activism history. And now I think can really have like an exciting for-profit economic history, because technology really lowers the cost of coordinating it enables us to like bring some of the tools that have been accessible to the for-profit economy for a very long time. And we can take some of these like communities of really deep meaning and give them agency that they haven't had before.
So to clarify one thing, you've mentioned South Bend a few times. We
Mhm.
obviously went to school there and worked there.
Yeah.
But if we're to extrapolate South Bend, is it like a tier 3 city, or how do you think of like where the biggest opportunities for what you're interested in lie?
Yeah. So, it's interesting to say that the vast majority of opportunities for what we're doing exist outside of the US. Because what we're mostly talking about is middle density, middle income cities. So, in this instance, South Bend is much more similar to a San Antonio and to, parts of Mexico than it would ever be to like Chicago. And so, when I think about communities that this rhymes with, like there's greater than 500 cities that have roughly the size, demographic, and income level in the US as South Bend. And then the same would be true, certainly extrapolated internationally. But I think, from like an investment perspective and a work perspective, start with the communities I know well, and then try and help other people who have the same problems.
So we spoke a little bit the other day about like philanthropies fill a gap that like government and markets don't or can't want to fill, right?
Yeah.
And you mentioned co-ops. What gap do they fill? Why do co-ops exist? And why is now kind of maybe an interesting time for that model to maybe grow?
Yeah, so a lot there. But like co-ops, like you should think about them existing when there are meaningful price imbalances.
Can we define that first?
A co-op?
Yeah.
Yeah. So I would say it's economic activity that benefits a lot from member ownership and interaction. And the goal of a co-op is to reorganize the supply side of the market and the demand side of the market so that the consumer accesses wholesale prices. Most co-ops are not successful in that goal. But like you should think about people reaching for those tools in hyperinflationary environments where there's a lot of demand for a limited number of resources, or there's only a few ways that we can allocate capital. And so those structures are proving inefficient. Co-ops in the US have had their heyday kind of in the populist era of the 1800s, when there wasn't a ton of currency availability. And so like the greenback movement was also coupled with co-ops. And then in the post-war eras of the Civil War, World War I and World War II are kind of the great co-op eras in the United States. And obviously there's like a much longer history of cooperatives outside of the US, let alone cooperatives that are trying to cross racial divides. So for example, co-ops have probably had the longest history amongst Black Americans who have been traditionally limited from a bunch of different markets. So I guess like what I would say is like co-ops tend to say this product is either too expensive to deliver to our market, or there aren't enough structures for us to sort of invest in creating this product, right? There tends to be a monopoly, an oligopoly, whatever. And so co-ops are a way of forming capital from the bottom up. And typically it's a small amount of financial capital, a large amount of volunteer labor and sweat equity, and then typically nonprofit status designation. Because these co-ops, for as much as they're trying to reorganize supply and demand, they end up recreating the cost structure of their for-profit peers. So, hey, I want to deliver a co-op grocery would be a typical example. They end up going to the same wholesale suppliers that all of their for-profit peers do, and just lean on them to say, sell me 5% of your product at cost because, we're really here for a mission. And then they rely on their volunteers to show up and do shifts in the grocery store to sell those products so that they don't have to pay labor, or they pay minimum wage. And all of these efforts are always limited by the number of people that you can get to buy into this kind of social solidarity work. And then, they essentially have no access to capital markets, right? They can't go out and access debt markets. They have no real equity to speak of beyond their ability to pay dividends back to their members or return money as as kind of lower prices to their members. And now for the first time, right, the cost of coordinating those people is way lower. You can coordinate much larger numbers of people behind a single kind of cohesive movement. So at very least, the scale at which you can operate a co-op is larger. But now, like even a co-op of like 10 or 15 people can start to access some really sophisticated financial technology because like crypto enables access to economies of scale that previously did not exist. And then, even beyond that, like there are a whole bunch of digital products that now we can distribute all the way to the consumer, pretty much building your own value chain, right? Like now the App Store is gonna provide a gate at the consumer level. But if you're providing an Android product, like you can go all the way from kind of building this product all the way to the consumer without dealing with some of these like really large, at times predatory cost or capital structures. And so like for the first time, co-ops can really operate sustainably. They can start becoming for-profit entities because, okay, now we have like real surplus. We're succeeding in reorganizing the supply side and the demand side of the marketplace. And we have sophisticated financial infrastructure, so we can start investing ahead of cash flow to build out these capabilities. And so like co-ops are a survivorship bias game. Like the average life of a co-op in the US right now is like 65 to 70 years. But that's like because 10% of co-ops survive past the first year. And the vast majority of them die out because they can't scale past labor, they can't scale past X, Y, or Z thing. I guess like what I would say is for the first time, we're going to start seeing these efforts become sustainable, be able to serve customers and use cases that like were previously the realm of like government programs or philanthropy, and they're going to be doing it over years and decades. And so whether they become interesting investments themselves and we start to see shareholder memberships emerge for co-ops, or they become customers for products, similar to the way that the startup economy has really emerged as a customer for its own products. I think we're going to start to see a much more durable part of the economy emerge that typically has just been kind of like a point in time, flash in the pan, voicing of frustration.
Yeah.
But yeah, I don't know a lot to.
No, that's great. So we've gone relatively deep without really mentioning crypto, right? That's like a big part of the strategy.
Yeah.
And you mentioned like coordination at scale and sort of being able to actually profit from some of these things. What else makes blockchain interesting for co-ops, and how are you thinking about it?
Yeah, so there's just a whole host of things, some of which I think are exciting, but we'll see if they're feasible or not, because they start to border on securities regulation. Like how much of this is pseudo equity versus how much of this is a commodity. But I think like even something in co-ops as simple as like revolvement, which is the process of, hey, I contributed equity into this co-op. It's typically like a farmer-based co-op, and the co-op buys my equity back over time. They buy it back at book value. Like that's the way almost every co-op in the US operates. Which in a balance sheet economy kind of makes sense. But as we move to an income statement economy, like you're dramatically understating the value of these contributions. And so being able to sort of approximate network value and say, here's the value of all the transactions, or here's the benefit of the long-term services that are going to occur here. If you look at something like, let's make it tangible because I'm too theoretical.
Yeah.
If you look at something like MakerDAO, already Maker tokens are a governance asset, right? They set the risk levels, Maker essentially being a bank for the crypto economy right now. They set the risk levels, they decide which collateral will be accepted. In a lot of ways, they're already acting like a co-op. But Maker tokens also represent a claim on all future kind of profitable loans made by the network. And increasingly, people are saying, well, maybe we should open up additional benefits, like lower cost loans are available to MKR holders. And the value of Maker is not just what did you contribute to the loan book at the start. It's what is the future value of a 200 basis point discount on a loan. And so when you think about the flexibility that equity value or that membership value, whatever you want to call it without breaching securities law, that is useful to Maker as a tool to start building new capabilities in ways that most co-ops can only dream of. And so crypto is really interesting in terms of financial flexibility, but it's also really interesting in terms of distributing the value, right? The ability to onboard members to a co-op is really difficult. It is a complex legal process, and co-op law in a lot of different states is purposely underbuilt because both the state and obviously a lot of lobbyists are very interested in making corporations the best way for you to incorporate. So there are a lot of corporations that act as cooperatives because that's the only way they can legally incorporate. But the ability to say, hey, you've completed some task or you've shown up in some geography and we magically gift you membership for the act of showing up is pretty novel in terms of saying, what are the barriers to membership, right? And so you could argue that actually kind of cheapens co-op membership, but I think in some ways it really unlocks some interesting business models. So as we look at connectivity, wireless co-ops have been a thing for a long time, right? It's pretty much like small cell networks or co-running fiber or whatever it is to provide really cheap wireless service to low-income populations. But the act of getting somebody to show up in person to receive a physical SIM card, show that they live in a certain district, improve their income, is really difficult versus kind of like algorithmic verification and delivery of membership via an eSIM to a wallet that just happens to be on their phone. Like we're getting to really seamless user interface of saying like, you were not a member of this co-op, you are now a member of this co-op. And that comes with all sorts of problems of like getting people socially to do some of the work that they need to do to participate in a co-op. But I think whereas membership was really underpenetrated before, we're going through a phase where membership is slightly overpenetrated, but it still feels like a much more positive step in terms of saying who can be a part of this work, who can help with what we're trying to do, and who can contribute, right? I think a lot of times co-ops really they restrict membership accidentally or on purpose too much. But it's an interesting corollary, like when you think about what's happening in a lot of like, let's say digitally native crypto right now, a lot of NFT communities are kind of popping up and saying like, wow, wouldn't it be cool if we just sort of gave everybody membership in something? But they haven't really defined the thing. They have like almost infinite agency without belonging. And here, and historically with co-ops, the opposite is true. They almost have too much belonging, and then they don't properly connect to all the people who identify with those things. And then they have almost no agency. So a lot of our strategy is, as opposed to kind of going to more digitally native communities, to say to these communities who know deep belonging and have relatively less agency, hey, this tool is for you too. And by the way, you've already done the hard work of all the social engineering. Let's just start to lever all that capital. Let's start to instrument all that capital so you can do something with it. Because like, they know what the problems are. They've been trying to fix them in dozens, if not hundreds of different ways. And they need sophisticated capital and sophisticated technologists to come in and make a lot of like really difficult products usable for some of these communities. But like when you can put that all together, it's pretty magical.
So is there any other context that's helpful here? Should we go into LongFi or any other kind of like more concrete example, or what do you think?
I think the only other thing to offer is just like, what does this economy look like over time? And the only reason I say that is because the name of the firm is Garry Elevator, because my grandfather ran a grain elevator for 45 years. And increasingly, like what I'm seeing is a lot of these cooperative efforts produce almost like commodity like streams coming off of them.
Yeah.
And in the same way that like, you know, small and independent farmers for most of the 18th, 19th, and 20th centuries needed like a financial partner to help them manage the value of their grain as capital. A lot of these communities are going to need this help. So for example, you know, and we'll talk about LongFi, but like, as you start to have some of these wireless co-ops that pop up, you know, there might be a grocery store that is a very good 5G hotspot. And all of a sudden they have like essentially data commodities that exist on their balance sheet. And really what they want to do is be able to provide fresh produce. And in the past, you know, they didn't have enough margin for it. Now they do. That is not like a crypto denominated concern. That's like a very dollar denominated concern. And so, you know, either Garry Elevator as a financial investor or some of the platforms that we're helping to build should be acting almost as like financial services companies to help some of these co-ops interact with an economy that, you know, maybe isn't their primary concern, but really empowers them to do what they want to do.
Do you find these people are like open to, you know, because you talk about crypto and blockchain and like kind of like there's a little bit of like a tension or paradox between like, you know, South End co-op and then jumping all the way to like crypto and tokens and all that. Like, how do you bridge that gap?
It's been an interesting one. There are a lot of people who are very skeptical. But I think you can get past it pretty quickly if you keep showing up. A lot of these communities are just trying to put together litmus tests, like, are you really here to help? And how long are you going to stick around? And I found that helps to get past quickly. The interesting thing is, you know, I think for a lot of people on the digitally native side, they're like, hey, this looks like a lot of work. Like, are there other places we could be investing? And, you know, maybe this technology isn't mature enough to start dealing with these use cases. I think those are valid concerns too. But, you know, the need is persistent at the community level. Like they know that they need to do something different, and they know more or less what the problem is. It's just hard to phrase it in a way that can be solved. And so I've found like the best thing that I can do is keep showing up, build personal relationship, and then just say like, hey, here's what I understand your problem to be. Here is like a way that the problem could be solved. And, you know, 50% of the time it tends to work, and 50% of the time they say like, please don't ever come back.
That's fair. That's good odds. That's good odds.
Yeah.
So, you know, if you talk to crypto skeptics, I think a lot of it is what's the real world use case? You know, there's a lot of hype, all this. I think that's something that's really interesting about LongFi is it is concretely useful in like a really interesting way. So tell us about LongFi, the team, how you found them, what your involvement is, what they do. Let us know.
Yeah. So LongFi Solutions is a installer and maintainer of decentralized wireless technology. And what that means is they take internet capacity and they repackage it across a number of bandwidths. So think like cell service, IoT networks, any number of things. And providing coverage and transmitting data using those methods can be financed and kind of paid for with crypto. And so LongFi really started and still are as the premier installer of decentralized wireless technologies. It's a lot of these technologies are marketed as like, wow, you can plug this in and put it in your window. And all of a sudden you as like, this is how I actually first got connected to the technology, plugged in a hotspot and started providing IoT coverage to like a random block in Chicago. And it was simple. Like I didn't need any help with that. But very quickly, a lot of these networks are deployed using kind of broad incentives. And they say, we will compensate you for optimal coverage of an area, and will penalize the whole network for over coverage of an area. And so
deploying assets in an optimal way is very different than just plugging them in and putting it up next to your window. So I had started with kind of the hobbyist's approach. I started trying to optimally deploy these assets, and very quickly you run into like, it's difficult to run a wireless network. You have to be citing these assets well. You have to install them to code. You have to be making them resilient to any number of conditions like power outages. Like if you have to go out every time there's a power outage and you skip a firmware update, it's very difficult to do. So I was like reaching out to a bunch of different folks to say, like, I have no idea what I'm doing. Can somebody just like teach me? Because like I'm doing this in my free time, and like I have 20 rigs and I have to like get them deployed somehow. And one of my friends put me in touch with Josh and Andrew. And it's kind of the nicest way anybody's ever looked at me and said, you have no idea what you're doing. And I was like, this is great. You guys know exactly what you're doing. They've installed more than 700 sites in a bunch of different communities, not just some of these kind of middle income, middle density cities, but very large, kind of high density cities as well. As well as ex-US. They've done some work overseas as well. And so I guess like the way we started working together was to say, let's just understand the returns that are available in this space. And then let's start to look at like what problems are arising and how can we solve those. And so increasingly they've moved towards a model of like facilitating a bunch of different groups investing in their own connectivity infrastructure. So whether that's real estate developers or cities or housing authorities, there are a bunch of groups who are not served well by the telcos for a bunch of really legitimate reasons related to cost of capital. And we can install decentralized wireless technology for like 90% less than it would cost the telco. And we can provide data to those places at a wholesale cost of data like 50 to 75% lower than is accessible via telcos. This is all because we use kind of like very simple standardized hardware. All of the operating systems are open source. They're powered by crypto. All the payments are powered by crypto. And again, like real estate developers don't care about that. What they want is like a 12% annualized and an equity upside. And so we help them manage a lot of the financial backend. And so it's been really interesting to kind of through them understand who needs decentralized wireless, because I had a very particular view on what that market might look like, and I think they've opened my eyes to how much broader it is. But then also all the other types of decentralized infrastructure that are coming down the pipeline. I think there's going to be a lot of different ways that kind of last mile infrastructure gets funded through crypto.
But so would LongFi be considered a co-op then? For people who use it, would they need to become members or make that bridge?
Yeah, so I would say like LongFi is a service provider to co-ops. So if you have a number of people who want to help supply decentralized wireless infrastructure, or if you say, hey, we're a city or a school corporation or whatever who has a real connectivity need, and we have X dollars of budget to spend against it, can somebody come help us? They tend to facilitate like, okay, how do we put this in place? How do we manage the asset risk associated with it? How do we sort of operate this whole system? But I would say the co-op is really the community that exists. And then you also have like the crypto protocol that all these are built on. So think like Helium, XNet, up until recently, Pollen was kind of moving in the direction of being a crypto carrier or crypto co-op. A lot of those groups are making kind of governance, membership, cost of supply decisions. And then they are like, not to confuse all these social organizations, but like if this is a union
like think about, Helium, for example, as the national chapter of the union, and all of these social groups as like local chapters of the union, and LongFi sort of as like a bank that services all of them, or, a service provider that helps them kind of operate their ongoing businesses.
So people in the community, if it was LongFi was available there, what would they need to do to kind of get access to the network?
So
I'm thinking, to give you a side, like I'm thinking from like an adoption perspective, right? Is it as simple as just like downloading an app and then you kind of have connectivity? Do they need to buy crypto? Do they need a wallet? Like what would that look like?
Yeah, so it really depends on the type of community that you're in. So there's a couple of specific needs when it relates to, in particular, like last mile connectivity access. And we could talk about like why, MNOs struggle a little bit to deliver some of that, but like it's either tends to be like mid-density, low-income cities who are struggling to get access to connectivity, or it's actually quite affluent groups who want like smaller microcell coverage. So for example, I live in an apartment building with a basement, rec room, and I want to be able to get 5G coverage down there. It would never be economic for AT&T to go there. Some of these crypto protocols are saying, hey, we'll give an incentive and we'll help transact in data and we'll manage the tower infrastructure. And we're actually going to sell off all of our data capacity to AT&T. So it's quite possible that like it would, in that instance, the tower and the co-op almost operates like a crown castle, where they have no interface with the end customer. They're just a participant in the value chain to increase increase wireless penetration.
Yeah.
That's far less transformative, but it's the
Sure.
V1
Yeah.
of all of this working
Yeah.
out. V2 is like, hey, I'm a student at a school corp. I need to be able to do my homework, but I don't have broadband to the home. And already a lot of school corps are doing programs like this, especially in the wake of COVID. They realized, how bad their connectivity services were in their cities because they essentially had a pretty widespread beta test group. Those kids are already getting like SIM cards in the mail from Verizon. If the cities and if the networks can get those deals done, or they're getting like Wi-Fi passwords from their teachers because there's a bus that's showing up and delivering small cell coverage. This would be as simple as like sending them a QR code so that they could scan that and activate an eSIM on their phone. So in the iPhone now, I think there's 10 plus, 14 is the upcoming release. On the latest iPhone, we'll have 14 eSIM slots. And so activating one of those slots, that will be attached to a crypto wallet, which consumers can either manage, or the co-op can manage on behalf of consumers, depending on who the payer is. Especially if there's like an NGO or a government payer, they'll tend to manage like wallet balances and handle all that. So it could be as simple as just downloading an eSIM. It could be as complicated as like signing up for Helium Mobile, which is sort of the front runner in all of these conversations to provide like a crypto carrier. So there are different levels of consumer adoption that are required, and I think the most interesting are kind of like the jankiest, because they tend to be, hey, we don't have a whole lot of options. We're willing to go through a bunch of hoops in order to like access this connectivity. We can't do it any other way. One thing that's important though is like, from the consumer perspective, they're not exposed to crypto volatility. I mean, they are over the long term, right? If these economic models and these cost structures are not viable at whatever cost of data, because the validators need to get paid more, or the installers need to get paid more, blah blah blah, then like the whole national co-op could vote to make crypto or data prices higher. But like in the short to medium term, prices are set in dollars, right? And this is the way that kind of the system recognizes we have dollarized costs of like putting up these assets.
How long would it take to understand if prices are viable, right? Is that like a 5-year experiment? Is it dependent on the number of people who join? What are the like important variables there?
Yeah, so it's dependent on the types of users that join, and it's dependent on the number of users that join. But I mean, when you look at the cost of the hardware associated with a lot of these crypto carriers, you can put up a small cell for like indoors for $5,000, outdoors for 10, and then put a little OpEx load on that. So like, let's say 10 to 15K to put up a hotspot, for their high-speed connectivity services. Most of these are 30 to 50 cents a gig. So if you ramp to like 100 to 125 gigs a day, which is a paltry sum of data usage, like these assets tend to pay themselves off in 12 to 16 months. So, I think it's pretty reasonable that you could get to viability on a lot of these assets with pretty low data costs.
Yeah.
But I think we're going to find out in the next year if people are willing to jump through the hoops in order to access connectivity. If a lot of these data prices go up, then I don't know that the whole system is viable, because you're competing against the MNOs who have dramatic advantages in cost of capital. And, that's like literally the definition of a centralized competitor. Like they should have dramatic advantages in cost of capital. For a very brief moment, crypto enjoyed 0% cost of capital, if not negative cost of capital.
Yeah.
But like, yeah, I think you're going to find out in the next year. Over the longer term, one of the things I think that will be really important to the long-term cost of data is that all of these decentralized wireless assets, they take internet and they repackage it as a different type of connectivity service. If you're just doing that on top of like Comcast, or in some of these instances, there were network incentives to deploy. People were using like T-Mobile SIM cards to provide like wireless backhaul. That's insane, right? And eventually, the MNOs will say, "Hey, this was great because somebody was paying us for data. Now you're starting to cannibalize our base. Either we're going to jack up the prices, or there's like a long history of like blacklisting of co-ops in the US, which is kind of it's an interesting area to explore of like how many of these groups have been cut out of the economy. But if you can't go end to end on wires that are sort of like aligned with some of these goals, they don't have to be like raw community, no nonprofit. It can just be like, hey, we would like to not have to deal with an MNO to handle our connectivity needs. It can be, wireless municipal broadband providers. It can be, building owners that are installing and owning their own fiber. Like, but if you can't go end to end, eventually, right, that is sort of the wedge by which the cash flows flow directly back into the system, and the incentives stay the same, which is, hey, we've reached an optimal balance of like cost to the consumer and total revenue. And if we cut cost to the consumer, then we're actually just under optimizing for revenue. So I think that'll be something that we find out over the next like 5 to 10 years. But if people aren't taking it seriously in a lot of these spaces, then I don't think they're being realistic about the risks.
So not to make it LongFi specific, let's just say like decentralized wireless specific. Are any of the current established players doing anything interesting here at all? Like, do you have Comcast buying anyone or trying to run some tech or some experiments to augment or see if this is something they want to get into? Because it seems, maybe the market is big enough where you can have multiple winners, but if Comcast could get into something like this in the early days and also own the customer experience, blah, blah, like, is anyone doing anything interesting?
Yeah. So
I would say one of the hardest barriers to cross is open source by default. And a lot of decentralized wireless providers are exactly that. So it's hard for MNOs to like meaningfully interface with some of these systems and say, like, we're not gonna, like, the first thing that their instinct is to do is to close off the system and centralize it. That being said, there have been some like network providers who have come forward saying, like, we have partnerships or we're interested in buying capacity. It's hard to tell who is serious and who is not, because there's a lot of press releases and a lot of noise. And then when regulatory issues arise, everybody backs off their public statements. So, who's to say which of these partnerships will go through? But, Dish is pretty aggressive in saying they want to have some kind of partnership with decentralized wireless, whether that's using Dish modems as hotspots and kind of flashing over some of that equipment, or enabling Dish users to roam to helium hotspots in particular, but I would imagine they'll ink a partnership with any decentralized wireless protocol that will have them, because they're just like so far behind. T-Mobile has enabled Helium Mobile to roam to T-Mobile 5G spots whenever you can't access a Helium wireless spot. And then, like, you look at groups like Deutsche Telekom and kind of more forward-looking European folks. They've been very like open to a lot of this, because like when you think about it from like a near to a midterm perspective, this is just a really cheap way for them to deploy small cell. Like, it's just not economic in a lot of instances, even with like, if we fix all the regulatory issues in the US, like let's say 30% of the cost of a small cell is just regulatory processing. And then you have like a bunch of other civil trenching and all this other stuff. It's not economic for the majors to deploy small cells and micro cells and like get all the way to the end consumer. And so they're like, great, this is just CapEx borderline for free, right? And increasingly like CapEx that's going to turn into OpEx. Like, that's a model they really understand. So I think they'll be excited about it in the near term because it's going to put 5G hotspots where they never were before, and particularly amongst their installed consumer base. Like, when you go from 4G to 5G, your data consumption almost doubles. And so, I guess one last thing too is a lot of these hotspots use CBRS regs, so they're unlicensed spectrum. And so not only now do we have small cells for cheap or for free from their perspective, and we have like increasing user data usage, but above all, we don't have to use any of our scarce resource, which is spectrum. Like, we can just continue to kind of like push better consumer experience through unlicensed spaces. And spectrum is like the currency of the realm amongst the MNOs, particularly on the mobile wireless side. So but yeah, it's been interesting. Like, I think they'll be excited about it up until the point that it starts to cannibalize their base. It'll be very similar to their approach to MVNOs, which are, we'd love to own them, but we'd love to really put some pretty tight boxes around where they can operate and how good their product can be. So that if the choice comes between, a $40 Boost Mobile plan and an $85 AT&T plan or T-Mobile plan, we know which one you're going to pick.
If we look out 5 or 10 years, whatever the right time frame is, and Log5 works, what would be some of the key reasons, right? We've spoken about a lot of the risks from tech and data prices and adoption and all that. What are some of those key levers that they would have figured out to kind of get to a really interesting place?
I think whatever I guess right now is going to be wrong, but I think a longitudinal customer relationship is going to be really important. And I think the reality is that this whole series of technologies put end to end to end, if it were just a a small cell network or private cell network, like, okay, we can find a spot provider for that. If it were just, hey, we have like crypto risks, okay, we can kind of find a wealth manager to help us handle that. But somebody who can like walk you through the whole process, I think they'll be able to say, hey, we built a relationship with a customer from start to finish. And that builds LTV over time, hopefully compounding. I think the other question is like, how robust is this infrastructure? And I think there is a trade-off between, hey, we need somebody to help us manage and update this infrastructure, and that's a lower margin business, versus like it's plug and play. And you install it once and then we don't ever need you again. And I think my hope is actually that for each successive wave of like decentralized wireless, we have a relatively long lead time between installation and replacement. And I think the reality is going to be that there are going to be other types of decentralized infrastructure that pop up. And as a result, you kind of have a motion with each customer that says, hey, we have install needs, we have management needs, but they're just not along the same tech spectrum. So for example, like you think about EV charging, you think about battery installations and kind of like return to grid power arrangements, virtual power plants. Like I think there's going to be a number of kind of last mile infrastructure that can only be installed cost effectively using crypto. And as a lot of these technologies and these platforms grow out, you know, the relationship with the installation site is going to be really important. And so, yeah, spending a lot of time in decentralized infrastructure, you know, it has a number of different names like proof of work or decentralized physical infrastructure. Like, it'll be interesting to see how that grows out over time.
I think one really cool thing is how in the weeds and involved you've gotten with this team and others. What where are you spending your time with them today? What are you helping them think through? Or yeah.
Well, I mean, to say that I'm, you know, they're doing all the work. I just get the benefit of like hearing them and helping them through a couple of things. But I think that the big question is like inking partnerships with kind of like scaled installation partners and saying, hey, you know, what type of risk are you willing to take, and what type of risk do you want us to take as a partner? It's very close to an investment policy statement arrangement or some kind of structured product agreement, which is great. Like that's the hard part of all this, is the negotiation. And so, you know, that's really I think the biggest part of where we're focusing. And, you know, the second thing is like capital allocation is when there are a lot of attractive returns in front of you, and you're limited by capital. I think the question is like, okay, which one do we chase today? And they have a lot of growth in front of them. They have a lot of options, and I think it's like, how do we productize this offering as opposed to you know, kind of becoming pretty good at a lot of different things. So yeah, that team has just been, it's been a very hard time to be in decentralized wireless. It's been a very hard time to be anything in crypto. And it's just like been amazing to see their like resilience and the way that they've operated through it, and the way that they keep, you know, kind of finding a way to like really serve customer need, even when it's not like it's not, you know, as much free money as it was like, let's say 12 or 24 months ago.
Yeah.
But yeah, I spend about, you know, a third of my time with those folks. I spend about a third of my time with another group, Ritual, that's focused on like communal well-being, and then spending kind of a third of my time looking for like, what is the next kind of platform we want to build, and increasingly trying to understand like climate change infrastructure deployment and what's necessary there, and kind of spending time particularly with communities in the Gulf Coast to just kind of understand what their problems are and where they might need new solutions.
Ritual is a whole nother talk we could have, and maybe we get Connor involved one day.
Yeah.
If we stick with LongFi and somebody's curious to learn more or wants to experiment or somehow get involved, what could they do? What would they do?
Yeah. So A, feel free to talk to me. I love that. But B, I think a lot of the barriers to just getting started are pretty low. Depending on how much capital you have to play with, you can buy a LoRa hotspot, IoT network hotspot for like $400 and put it up in your window. And if you want to kind of get more aggressive, you can buy a 5G hotspot for like $2,500 and put it up in your window. And you can start learning about proof of coverage returns, and like a lot of this starts as hobbyism. Right. And even better than putting it up in your windows, like put it up in your favorite bar, or, put it up in a school or something where like, hey, somebody has a need for this and it's unmet. And then, obviously like the team is always looking to talk to folks who say like, hey, my community center needs to be able to get in contact with like half of its members, or we're trying to deliver driver's ed via connectivity solutions. Like we have all the users, we just need help to figure out how to do this in a way that they can afford. Those are conversations we love to have because, there's I think a lot of times those communities in particular have been portrayed as like communities of need. Whereas like we look at that and say, wow, you have a ton of assets, which are your relationships with all of these different folks, typically like access to good Wi-Fi and backhaul, and just like the ability to bring all those people together and get them to try something new. And for us, those are just a ton of assets that we'd love to be able to help people manage. And so, as people think about groups that fit that bill, we'd love to have conversations about how we can help.
Really cool. Well, John, like the intersection of like community-led solutions and crypto is not one I ever thought of before we kind of started talking about it. So it's really cool to see you going deep. An hour went by really quickly.
It did.
If people wanted to learn more about you, Garry Elevator, where could they go? How do they reach you?
Yeah. My email is john@garryelevator.com. We're working on a website. Sharing a lot of thoughts via like Twitter and a couple of different blog sites. So yeah, would love to connect with folks as they're interested.
We'll put that as part of kind of the show notes, if you will, after this. But thanks for sharing, and we'll do Ritual round 2 at some point. But this was fun, man. Thank you.
Yeah, thanks, man.
All right.
Thank you.
Gary Kamal, thanks for joining, man. Nuno, you too. See you guys.
Hey, really appreciate the conversation. I was wondering if I could ask a question, if possible.
You have time? Yeah, cool. Let's do it.
Yeah. Hey, thank you. You mentioned co-ops and you mentioned crypto as well. So I was wondering how do you see the relationship and differences between co-ops and DAOs?
Yeah, so I think all DAOs are co-ops, whether they want to admit it or not. I think DAOs have a lot to learn from the social organization and engineering that tends to precede most co-ops. So like if you look at the history of pretty much any co-op in the United States, it tends to start with like 4-hour meetings where people are, drinking too many beers and arguing over like the future of, whatever economic system they happen to be in. And that tends to be a feature, not a bug. And so I would say, like, when we look at DAOs, they have a lot to learn from the social engineering of co-ops. But co-ops have a lot to learn from DAOs in that, like, for the first time, we have a really good legal structure and in ways a really good financial structure for co-ops that didn't exist in US jurisdictions. It does exist in internet jurisdictions, right? Whether you're launching your DAO on Ethereum or Solana, or, take your pick of what kind of L1 you choose to launch on. I think there's a nice symbiosis there of very, very clear legal precedent and obviously clear legal contracts in the form of smart contracts. And then, access to financial tools and financial markets, depending on how mature the L1 ecosystem you're building on is.
Thank you. That makes sense. Last question. You mentioned there at some point the difference between a balance sheet economy and an income statement economy. Can you go deeper on each of them and the difference between them, please?
Yeah, I mean, I wish I could go much deeper. But like when you think about a concept like book value of equity, and where and when that's appropriate, it tends to most accurately approximate the value of equity when the vast majority of company assets exist on the balance sheet. So for example, like in real estate heavy companies or asset heavy companies that have access to significant amounts of leverage, book value of equity is a pretty good approximation. Whereas like when you look at a SaaS company with like an extremely clean balance sheet and the vast majority of assets in goodwill, for example, that may not approximate the market multiple or the growth value of that business. And so I think like if you are capping the value of equity at book value, you're not necessarily recognizing the real drivers of value of the equity there. Now, the hard part about talking about all this in equity and securities terms is then you're asking yourself the question, well, are all these crypto assets in some way pseudo equity, and therefore do they pass the Howey test? I mean, that's a question we're going to have to come to at some point. But when I think about it, at least I think about like what is the productive value of this business and how tied is it to the physical PPE? And I think that's becoming less and less true over time. So I'm sure other people have like partitioned it better than balance sheet versus income statement, but at least that's kind of how I started to think about it. I don't know if you have thoughts on that.
No, thank you. That makes sense. Yeah, I can see what you mean now. Yeah. And I really appreciate the conversation. Thank you.
Cool. Thanks again, John.
Yeah.
Thanks
to
guys
you
for
both.
joining.
Good to see you guys.
Yes.
Bye.
Yep.